I have some broader concerns on this MNAV compression across the industry. The value of their Bitcoin holdings as a percentage of their equity is becoming worth more than the entire company. I want to watch very closely over the next 1-2 years. We have to be really careful to monitor the leverage ratios of these companies. It's a bit of a perfect storm of events in the last 12 months. They're still quite healthy today, but that can change very quickly. And it's all great because they're buying about 500% of daily supply, but we need to carefully track these things as the bubble unfolds. I think it's diminishing returns at this point. I don't think the current format is going to be sustainable beyond 5 years from now. All these options are not so great for Bitcoin.
Archie.
Yeah, I can see. So this is just MetaPlanet. These green bars are how much they've been buying in the last month or so. And yeah, you're right. There's a massive jump there. So they've obviously unlocked some good capital. Yeah, this is a bigger topic, but I have some broader concerns on this MNAV compression across the industry.
Let's get into it.
Well, so you can see it here. This is the MNAV of MetaPlanet. It was probably on average around 2 or 3x, and it went up to 7, and now it's just above 1. So it's compressing to 1, which you'd kind of expect, I think, in the long term. It's very impressive. They've been able to kick up that yield from those massive buys they've had recently that you just touched on. This is their share price. It's kind of bled out a lot. So what is that down? That's pretty wild. Yeah, it's down about 80% in the last couple months. It's just, Bitcoin's not too far off all-time highs. But that is also summarized across the board, where you see the average MNAV across all treasury companies trends down with time. That's not too surprising. And then this is what I find more interesting is the percentage of all treasury companies. So there's about 180 of them. It is 186 to be exact. There's now about 25%, it's a blue line here, of treasury companies with an MNAV less than 1. So what that means is the value of their Bitcoin holdings as a percentage of their equity is, it's the value of their Bitcoin is becoming worth more than the entire company. And this here includes debt and everything. That's concerning because if MNAV is above 1, you can easily issue equity. It's great. It's accretive. It's good for shareholders. You can buy more Bitcoin and grow your relative yield. But when it's below 1, it's dilutive. So it's bad to issue equity, generally speaking. So you got a few options. You can raise debt and increase your leverage risk. You can potentially sell some Bitcoin or some holding or something of value to buy back more stock and close the gap. Or you could potentially abandon your Bitcoin strategy altogether, right? So all these options are not so great for Bitcoin because they create some sell pressure, except the debt, right? But that adds leverage to the system. So that's why the MNAV compression is something I want to watch very closely over the next 1-2 years, because if enough are below 1, it's going to incentivize use of debt at the very least. And then we have to be really careful to monitor the leverage ratios of these companies. They're still quite healthy today. The sort of the debt to Bitcoin value, the debt to the enterprise value of the companies, debt to equity ratios, they're all quite healthy still in sort of 10, 25, 30% region. But, they can change very quickly and spike. So this is a topic I'm watching very closely. Right now, I said it's all great because they're buying about 500% of daily supply, the treasury companies. So huge buy side pressure. I see price going way higher as a result, as long as that continues. But we need to kind of carefully track these things as the bubble unfolds.
So why was the MNAV at multiples of the value of the Bitcoin holdings? Was it optimism about the treasury company's ability to accumulate at a certain pace, or was it a novelty of this sort of company vehicle? What happened for the market to reward these companies with a multiple greater than the value of the Bitcoin?
Yeah, all of the above. I think it's a bit of a perfect storm of events in the last 12 months. The key driver is MicroStrategy, obviously, is being a huge success story the last 5 years. They've crushed every company in the S&P 500, and they've just completely outperformed, NVIDIA as well. And so I think a lot of companies look at them and say, well, how do they do that? And, just scale their company so massively in such a short time. And then all they did was buy Bitcoin at a simplistic level. Obviously, there's a bit more involved in that. But I think that's quite an attractive value proposition when people see Bitcoin on average going up, say, 40, 50% a year. The cost of debt being less than 10%, you can obviously arbitrage that traditional financial market, and as long as those things remain relatively constant, get a great result long term with the use of leverage. So that's the key motivating factor. A lot of these companies that have become treasury companies were loss making or had share prices that were trending down, or were very small businesses. Like Metaplanet was a hotel business, not doing well over the prior years. So they had incentives to kind of look for ways to break out and do something different. I think in the early days, when it was just MicroStrategy and then a few others, you had a very significant value prop to add. We're going to do it. MicroStrategy did. You go to investor base and say, can I raise 100 million, $1 billion, what have you? And he said, we're copying this. We're doing it in Japan. We're doing it in Europe. We're doing it somewhere else. Different market, different opportunities. And that, I think, is quite a good value prop. And drew in a lot of capital. Then at the same time, we had Trump come in to become president, right, in January election. And that was significant because it was a pretty polar outcome in the election. If Trump didn't win, the crypto asset class would have been probably a mess. Now, as we know, we had Choke Point 2.0. All the banking on-ramps into Bitcoin were shut down. Our fund, which had been running for 6 years, also was debanked twice in a 3-year period for absolutely no reason other than the bank was tapped on the shoulder to discard of crypto entities. So there's just no capital coming in of substance. So that was completely flipped in January. And then we had the whole stream of executive orders, obviously, the digital asset or the Bitcoin Treasury that the US has established, but also all the stablecoin acts, Genius Act. So it's kind of basically said, the SEC also coming on board, right? We got rid of Gensler and it's become very crypto friendly. It just basically sent a really strong message to Wall Street and essentially the rest of the world as a result that Bitcoin's here to stay. We're open for business and big capital can come in. We've got clear legal and regulatory boundaries now. And on-ramps just flooded. And I think you combine that with success of MicroStrategy and businesses like, let's go, let's do this. And that worked really well at first. And you get these huge multiples, typically 2-3x NAV when they raised and launched. But if you're number 200 treasury company, what is your value prop, right? If you've got 50 others on the NASDAQ or what have you, why should I invest in you? And what are you going to offer me over and above MicroStrategy or just a Bitcoin ETF? So at this point, it's kind of diminishing returns. I think if you want to raise a treasury company now, you have to really have something unique. Whether that, I don't know what the answer to that is. It could be a brand new market like Metaplanet was in Japan. It could be access to some unique investor base or having some special deal with a bank or something in terms of what you can get, credit loans, whatever. But I just think that the run-of-the-mill treasury company is going to really struggle going forward, and the MNAVs are going over the long run just going to continue to compress to 1. There'll be mini hype cycles. If Bitcoin goes to 150K this year or 180K next 6 months, right? I'm sure treasury companies will see a new wave, completely pump up again on that hype. But I think you net it out, and the trend is definitely towards 1 over the long term.
Do you think there are any other catalysts beside from the Bitcoin price spiking that could set off these treasury companies?
I'm open-minded to it because we've been in this market long enough. We see funny things like that happen. I can't pinpoint something right now except for maybe some big regulatory change, like if the Fed, if they started QE or something, or if there was 5 rate cuts instead of 3 in a short period of time. Some kind of an event like that, which was a catalyst. But I just, I can't find one for you right now. Otherwise,
it does seem like there's still no shortage of Bitcoin treasury companies that are being created. So they must be getting some kind of signaling from the market that there's an appetite for this. When MicroStrategy first started, I think they've changed their capital structure quite significantly in the way that, and also in the way that they're raising capital since last November with, is it their preferred perpetual?
They've got so many products now. Yeah.
And so, you know, they're being really innovative and quite aggressive in pushing new products into the market. I think the market has responded quite well to that. But do you see any pools of capital that have not yet been tapped? I mean, I'm not suggesting for a moment that we've exhausted any pools of capital, but there are trillions and trillions of dollars of capital out there, but not all of it can access Bitcoin at the moment.
I mean, you know, there could be something I haven't thought of, but they've tapped into pretty much every market, right? Equities, convertibles, warrants. There could always be something else out there, but I think it's diminishing returns at this point. I think they're gonna. I think the main value prop is they can generate some form of yield on the Bitcoin in the long term, whether that be through, you know, I think at some point the raising debt and equity is not going to be the business model. It's going to convert to something where they lend out their Bitcoin and get some kind of rate, right? So that's the kind of, and what is that? Is it, you know, you've got lending platforms now for Bitcoin, and you might be able to get, I think the average would be 1 or 2%. Some have 3 or 4% yield per year. So perhaps long term they could get somewhere around there. Maybe it's 4 or 5%, even if they've got some unique offering. So then you could argue, okay, the value of the company, again, I'm talking multiple years out, 5, 10 years out, it might be that extra 5% on top of, you know, an MNAV of 1 or something like that. So there is a case for that. And then the question is, what's the competition? So I think of the ETFs obviously can't do that right now, but I expect there'll be other products available in 5, 10 years that can do things like that. So it's just going to become really competitive. But I think their business model long term will be utilizing their Bitcoin as basically as a bank, a Bitcoin bank. I don't think the current format of just issuing debt and equity is going to be sustainable beyond 5 years from now.
So Saylor famously said that, you know, the fixed income market is worth hundreds of trillions and he wants a couple of points of that. So like how long do you think something like that could take? Is that a realistic possibility, first of all? And how long would something like that take? Because in the context of what's happened to gold recently, gold has put on 4.5 trillion in market cap in 6 months, 9 months, and people have always been saying, well, you know, Bitcoin can't go up much further than where we're already at, because where's the money going to come from? And it's like, well, gold just did that. Where's the money coming from for gold?
There are some different factors with gold though, like some of the banking acts were changed 2 or 3 years ago so that gold could be used as collateral by banks. That wasn't allowed. So that like literally unlocked like just billions and billions and billions of flows in the last few years. And then you have factors like China and Russia accumulating a ton of it on the back of, you know, lack of trust, I suppose, and isolationism globally. You know, the US controls they put on Russian assets a few years ago. So rising populism globally. And, you know, the kind of the breakdown of globalism globally has driven a lot of interest in those hard money assets and less trust relatively in US dollar. So you could argue why not Bitcoin as well. But I think the banking change in regulations there is the really big driver. And secondly, gold's just got, you know, thousands of years of trust behind it. You know, we Bitcoiners are relatively still, as against the whole population, a small percentage. So that can change. Though you know, this is another topic altogether, but we can talk about later maybe. But I see a really growing and starting to become relevant risk with quantum computing, and it's starting to get talked about more. And I think that is going to be a headwind until it's solved, because there's a lot of things there that are not being discussed that are significant risk factors for Bitcoin in the next 2, 3, 4 years. And I just don't see us capturing the same flows as gold until something like that is solved on.